Hey traders. So today I'm going to take a moment to do a little victory lap on calling the at least near term high on crypto before this big down move. Now, everybody was looking for that all time high in Bitcoin. And, like it or not, every single crypto out there is in some degree correlated. It's basically Dow theory at work, where the major market indices agree with each other. And it's no different, it seems, in crypto. Now, in the grand scheme of things, this pullback is not that severe, but I do know a few people that were taking out leveraged longs around 18,000 because it seemed very apparent that it was going to come up here. And that was just not a good idea. The reward, you know where that should be. It's going to be the high itself. And so your potential reward for the risk was just not there. You shouldn't have done it. So learn from that if you did. But why did it stop? Why did it stop where it did short of the high? Well, I'm going to go into that. I'm going to show you exactly why it was. It was very, very apparent to me. So I have a way that I get alerted to little instances of volatility. These instances of volatility are when you have a price spike that looks a little something like this. This was one that happened before it got up to that high. Let's clean that up a little bit. So this right here, basically, you have a bar that comes down, breaks lows in the past, and then closes back very close to where it began. Close this little red line, which is a 9-period median. And so that can oftentimes launch price, because think about it logically. A bunch of people are long from, let's say, this level right here. Okay. And they might have very tight stops. They've got tight stops. They're trying to, shoot, for some really ambitious target in just a few points. And boom, they're going to get stopped out by that bar. And here's the thing. That's happened to me time and time again. A lot in the years that I've been trading. And it pissed me off. It pissed me off until I finally thought about the corollary to that, which is if I'm seeing this often enough that it takes my money, why don't I just look for it as a trading signal? And I did. And that's made all the difference in the world. And now I look for these instances, I call them spikes, for a signal. Because there's a lot of people that were trying to push this down. In this case right here, they're trying to sell this down, this bar, and they failed. And up price launches. And so I saw this here. Let's look at it in the context of time. So here is our all-time high up above us right here. Let's call that 19,900. We came up to this past high here on November 24th, and people tried to buy it up here, but they failed. And they weren't able to push it to the high. Now, if this momentum was continuing, it should have gotten to that high. It should have had the oomph it needed. There should have been buyers out there that were willing to buy up to that all-time high. But there wasn't. And it failed just in that 30-minute bar alone. And we can also measure this and see, well, was this significant? How much of a break was this? And this can often be a useful metric. And so it sets up for a very, very nice trade if one were going to trade it. And I posted about this on my ideas. Right. This signal right here. So it was very apparent to me that this was showing signs of weakness. And more than that, more than just having an opinion, this sets up for a very good trading structure. You can structure your trade around this because all you need to do is have your stop just clearing that high. Sometimes it might spike up there again, but it shouldn't. And it lets you know exactly where your risk can be. And then you can say, well, I want to take it back down for the retracement of this move. And it sets up for a really nice trade. It's great because risk management is built into it. That's why I like this signal so much. And so going forward, we didn't know if it was going to go or if it was going to show some volatility, but that failure to retest the high was enough to tank this. And here's where we sit today off of that move. And so this failure to get up here was why price tanked. Now, all the news comes out with different reasons, like, oh, Coinbase did this, or it's the whales. I've never met one of these. Actually, I have met some of these whales, and they actually have better things to do than manipulate price. They're living their life, driving their Lamborghinis, or whatever you want to say they're doing. The why is irrelevant, because even if you knew what it was, it's too late to make money off of it. This why, the fact that there weren't as many buyers as sellers at this point before the all-time high, is why it tanked. That's it. It's just that simple. And there were some others. There were some other setups too that I liked. Litecoin, it was consolidating. I look for the Bollinger Bands and the Keltners to converge. And at the same time that these were, that Bitcoin was set up that little spike there, Litecoin was also setting up. It was setting up this consolidation here. It had been holding this halfway point right here, just in the short-term price action. I love my halfway points. I love my 50%. You see where it came and held right here. If I can get that, yeah. So it came and held it once, and that tells you where support is. And now all you have to do is look for a break of that support, and that tanked it. Another one, Ripple, same deal. Was at the 50%. It was holding this support right here, and then a breakout, boom, to knock it down. Looks like there's still some bullish people in here. So a lot of people have been asking me, well, is this now the time to buy? Is this the pullback? Like, what's the level it's going to go to? I don't know. That's not what I do anymore. I spent years and years trying to do forecasts on price to no avail. I look for setups. I have signals and patterns that I've studied. I've even printed them out. And I memorize them and put them in my brain so that I can recognize them when they happen. And so when I see a signal, I'll post about it. And that's the way I'm going to trade. So don't get caught up in all the BS about levels that it should get to. Just focus on looking for patterns that you are comfortable with, that you think have a statistical edge, and wait patiently for those patterns. That's trading as I know it. I don't have any other thing that I can present as any more true than that. So good luck, and be disciplined. See you in the next video.